right? Ready to kind of pull back the curtain on the Forex market a little bit. This information on Beat the Market Maker, it's really got me intrigued.
Yes.
You know, this isn't just our normal like technical analysis stuff. This is like getting into the heads of the market makers, you know, those big players that always seem to have the upper hand.
Yeah, no, you're spot on. It's like it frames the whole Forex market as this high stakes poker game, right?
Yeah.
And the information suggesting that these market makers are like masters of manipulation, right?
Yeah.
Using these tactics that most retail traders don't even know are happening.
Yeah, it's almost like they've got this this secret playbook, right?
Yeah.
And BTMM is like we got our hands on a copy. The whole idea hinges on the fact that, you know, market makers, they're businesses, right?
Mm-hmm.
Bottom line is profit.
Mm-hmm.
And well, a lot of that profit comes from, let's just say less informed traders.
Yeah, that's a key point. It's not that market makers are, you know, inherently evil or anything. They provide liquidity. They keep the market moving. But they're also playing to win, and that means using tactics that can seem a little unfair if you don't know what to look for, you know.
Right. So let's unpack some of these tactics that the information outlines. The one that really jumped out at me was requotes. It's like you're placing a bet at the horse race.
Right.
And then right before the starting gun, the odds change.
Exactly. You think you've locked in this great price, but then bam, the market maker rejects your order. And they give you this new price that's way less advantageous. It can be really frustrating, and it's a very deliberate tactic. You know, It's all about managing their risk. They're making sure that they're not the ones left holding the bag when the market moves against them.
It almost feels like they're playing with loaded dice.
Yeah.
And then there's that whole triggering stops thing. It's like they have this sixth sense about where traders are going to panic and sell.
Yeah. Now, it's important to clarify that they don't know exactly where your stop loss order is. But they have very sophisticated software that can identify areas on the chart where stop orders are likely to be clustered. And let's just say they're not afraid to exploit those areas.
So it's more like they're setting traps in places where they know traders are going to get caught.
Right.
And then if that wasn't enough, there's spread manipulation. That's where they widen the gap between the buy and sell price.
Yeah.
Making it more expensive for, you know, us regular folks to even participate.
That's right. Think of it like the house advantage in a casino. It's a built-in edge that tilts the odds in their favor. And this edge, it becomes even more pronounced during times of high volatility. You know, when emotions are running high and traders are more likely to make impulsive decisions.
So they're not just playing the game. They're setting the rules of the game too. And this information claims that they even have this predictable pattern that they use to pull this off. This 3-level cycle. Can you break that down for us?
It's a fascinating concept. The information describes it as a three-phase cycle, right? Accumulation, unidirectional swing, and then reversal. You can almost imagine it like a wave building up, crashing on the shore, and then receding back out to sea.
Okay, I can picture that. So during the accumulation phase, are they kind of like setting the stage, luring traders into this false sense of security?
Precisely. They're establishing a trading range, letting the market consolidate, creating this kind of honey trap for traders who think they've spotted a trend, and then bam, the unidirectional swing hits. They unleash this powerful move in one direction, and it triggers all this FOMO. It draws in more traders who just get caught up chasing the momentum.
And then just when everyone thinks they've figured out the game, the reversal hits, they pull the rug out from under everyone, cash in their chips, and the whole cycle starts all over again.
Yeah.
But here's the million-dollar question. If they're following this pattern, doesn't that mean we can learn to anticipate their moves and play accordingly?
Yeah, that's the whole premise behind Beat the Market Maker, right? It's not about outsmarting the market. It's about understanding its rhythm, you know, the ebb and flow. If we can learn to recognize the footprints of the market makers, we can maybe avoid their traps and even profit from their moves.
It's like learning to dance with a partner who's leading, but you already know the steps, right?
Yeah, exactly.
So how do we actually put this into practice? What are some of the specific strategies that BTMM outlines?
Well, the information gives us a few really intriguing strategies. Each one is designed to kind of capitalize on different phases of that 3-day cycle. One that I find particularly clever is the Stop Hunt Hyo Entry.
Okay, that name sounds a little bit like a football play. Break it down for us.
All right, so imagine this. The market makers they're driving the price towards an area where they know a lot of traders have set their stop loss orders.
Right.
It's like they're flushing out the weak hands. But instead of getting caught in that trap, you anticipate it. you enter a trade in the opposite direction just as the market's about to reverse.
So you're basically using their manipulation against them. It's like judo.
Yeah, right? Exactly. Yeah.
Are there any other strategies that kind of stood out to you?
Well, there's the Brinks Trade. This one really plays on the psychology of the market. The information points to some very specific times of day, 3:45 a.m. and 9:45 a.m. Eastern time as being prime times for market maker manipulation, especially during session changeovers. You know, it's like rush hour for the Forex market.
Oh, interesting. So you're saying these are the times when they're most likely to make their move, and if we're paying attention, we can kind of catch a ride.
Mm-hmm.
Okay.
And then there's another strategy with a pretty memorable name, the Stop Hunt Hyo Hold the Mayo.
Hold the Mayo. Okay, I'm intrigued. What's the Mayo in this situation?
All right, so the Mayo is a nickname for the 200 period exponential moving average, the 200 EMA. It's a technical indicator that a lot of traders use to identify trend direction.
Okay, the 200 EMA. Gotcha. So in this strategy, are you essentially using the 200 EMA as a line in the sand?
Precisely. The setup involves a stop hunt that pushes the price up to that 200 EMA. And if the market shows signs of rejection at that level, it could signal a reversal, giving you an opportunity to enter a trade in the opposite direction. The 200 EMA, it acts like a confirmation point, adds another layer of conviction to your decision.
Okay, so it's like the 200 EMA is the backstop, and you're waiting to see if the ball bounces off it.
Right.
Makes sense. But I'm guessing there's more to BTMM than just these individual strategies, right? What about those advanced concepts you were talking about earlier, like the?
Yeah, you're right. The information suggests that mastering BTMM it involves looking beyond those individual setups and understanding the bigger picture. One of the concepts that really stood out to me was multi-session analysis.
Multi-session analysis. Okay, that sounds intense.
It's about recognizing that market maker manipulation, it doesn't just happen in a single trading session. It often plays out over multiple days or even weeks. The information encourages us to look for what it calls multi-session MW formations.
Okay, so I'm picturing M and W shapes on the chart here.
Mm-hmm.
So are these patterns like larger versions of those 3-day cycles?
Exactly. They're basically M or W shaped patterns that form on higher time frames, like the 4-hour or daily charts. Identifying these formations can help you spot those bigger market trends that are unfolding over those longer periods.
So instead of trying to catch every little wave, you're looking for the tides.
That's a great analogy, and the information suggests that by combining multi-session analysis with the core BTMM strategies, you can potentially turn those quick in and out trades into longer term swing trades, aiming to capture larger portions of those market swings.
So this sounds like a way to potentially increase your profit potential while reducing the number of trades you have to take. But let's be realistic. The market doesn't always behave in such a predictable way, right? What about those times when things are volatile or choppy? How does BTMM adapt to those different market conditions?
That's a great question. The information acknowledges that BTMM needs to be adjusted based on the prevailing market conditions. You know, whether it's trending or ranging or volatile, it emphasizes recognizing the personality of the market, so to speak.
So it's like adapting your driving style depending on the road conditions, right?
Yeah.
Smooth highway, you can cruise along. Bumpy back road, you gotta slow down and proceed with caution.
Precisely. For instance, in a strong trending market, you might focus on continuation patterns like straightaway rises in an uptrend or straightaway drops in a downtrend, just riding the momentum of the market. But in a volatile market, the information suggests that you reduce your position size, tighten your stop loss orders, and prioritize those high probability setups like Brinks trades where the timing is more predictable.
So it's about playing it safe when the market is wild and then capitalizing on those clear opportunities when they present themselves. Makes sense. The information also mentions combining BTMM with other indicators. How does that work?
Yeah, think of it like adding tools to your toolbox, right?
Yeah.
While BTMM provides a framework for understanding market maker behavior, incorporating other indicators can help you refine your entries and exits, confirm your analysis, and ultimately make more informed decisions.
So instead of just relying on the beat the market maker blueprint, you're adding layers of analysis to really fine tune your approach. What kind of indicators are we talking about?
Well, familiar tools like moving averages can be used to confirm trend direction. identify potential support and resistance levels. Remember the 200 EMA we were talking about before?
Right.
That can be a powerful confirmation tool for a stop hunt high hold the Mayo setup.
Right, the Mayo. So that's a perfect example of how these indicators can work together. What about some other tools?
Well, the information also mentions Fibonacci retracement levels. These can be really helpful in pinpointing potential reversal zones within those BTMM levels, providing even more precise entry and exit points.
This is starting to feel like BTMM. It's not just a strategy, right? It's a whole trading philosophy. A way of looking at the market that integrates multiple tools and concepts. But even with the best strategy in the world, we're still human, right? Emotions can get in the way. How does BTMM address the psychological aspect of trading?
You're absolutely right. That's a crucial point. The information emphasizes that understanding market maker manipulation, that's only half the battle. The other half is mastering your own mind. It stresses the importance of developing a rock-solid trading plan.
So we're not just winging it based on gut feeling.
No, not at all. The information advocates having a predefined set of rules that guide your trading decisions. This includes clear guidelines for position sizing, stop loss placement, and profit taking. Having this plan in place can help you avoid those impulsive trades that are driven by fear or greed.
It's like having a set of guardrails to keep you from driving off the road when the market throws a curveball.
Exactly. But even with a plan, trading can be an emotional roller coaster. That's why the information also recommends keeping a trading journal.
So more than just tracking wins and losses, you're suggesting documenting your thoughts and emotions throughout the trading process.
That's right. By writing down your feelings before, during, and after each trade, you can start to identify patterns in your behavior. You'll see what triggers your impulsive decisions. You'll recognize your strengths and weaknesses, and ultimately you'll become a more disciplined and emotionally balanced trader.
It's about becoming more self-aware.
Yeah.
Recognizing how your emotions can influence your trading decisions and developing strategies to manage them effectively.
Precisely. And it's not just about what happens in your head, right? The information. It also emphasizes taking care of yourself physically. Getting enough sleep, exercising regularly, and taking breaks from the screen. These can all contribute to better decision making and overall well-being.
Yeah, it's easy to get sucked into the 24/7 nature of the Forex market, but stepping away, recharging, that can make all the difference. So we've talked about strategy, we've talked about psychology, but there's one more piece of the puzzle here, right? Putting it all into practice. How does the information address the practical aspects of implementing BTMM?
The information, it really stresses the importance of backtesting and optimization. You know, it's not enough to just read about these strategies. You need to actually put them to the test.
Right. So backtesting, that's where you basically simulate trading, right?
Yeah.
Using historical data. It's like a time machine for your trading strategy.
Exactly. The information recommends using a reliable backtesting platform or software and running your chosen BTMM strategies on various currency pairs and time frames. It's all about seeing how those strategies would performed in the past. It gives you a sense of their potential effectiveness.